Taking a look at the interest rate market today, I want to focus on the 5-year note today to start the week. Really, you're looking at the shorter end of the duration under heavier selling pressure to start the week than the longer end. The 2s and the 5s, we really saw some movement there today. Some selling pressure. After 4 days of rallies, we saw the 5-year note settle down right around the 119.28 level. So that's at the low end of the range for the day. And again, we had some narratives starting this week in the marketplace. When you look at some Fed speak, we had a lot of Fed speak coming out today and will continue throughout the week. But certainly when you look at the volatility, I should say, in the equity markets, we saw the equity markets lower, then higher, then back lower, taking their cues from the trends or the narrative in the U.S.-China negotiations right now. And I think that's part of the reason why we saw a little bit of the selling pressure on the yields today. I said on the bond market today, and the yields rallying a little bit is primarily due to that narrative. And looking at today's volume, I think it's important to point out that although we did see a pretty significant move in the 5-year, volumes were low to start the week. So we'll have to see if that's going to pick up if we see further volatility in the space. Yields right now, the 5-year right around the 1.39 level. Now we did see a low of 1.32 earlier in the day, but then the selling pressure persisted and we saw those yields push back up to the 1.39 level. Looking at the data coming out over the next couple of days, I think the market's going to be very focused now on some of the inflation data. We have PPI tomorrow, CPI on Thursday, and last week Fed Chairman Powell indicated that he believes that they need to continue to try to stimulate the economic structure to increase inflation and push it above that 2% target. So I think now those numbers are more important as the market digests those releases in the coming months, because of the fact that the Fed chair pointed those out specifically. Also, we have the Fed minutes coming out on Wednesday, and during this time, as I mentioned, we have a lot of Fed speak. They're back out on their speaking circuit right now, and we're seeing a lot of talking points being priced into the market, and we're seeing the intraday volatility not only in the equity markets but also in the bond markets, where we're seeing again that narrative flowing through as we move once again towards another Fed meeting at the end of the month. And currently we're seeing the CME Fed Watch tool pricing in a 71% chance of another cut in the October 31st meeting.